Good afternoon, ladies and gentlemen. Welcome to this special edition on Business Today Television, where we will discuss the most talked about and India's largest public offer of equity shares from Hyundai India. The IPO opens today for subscription is for 27,870 crores. This is the largest offer for sale slash IPO that has ever come on the Lal Street and is priced anywhere between 1865 to 1960 rupees per share. A lot of data will be coming to you on the screen window, but let us at this point of get Ms. Astha Jain, Senior Research Analyst at HIM Securities, to discuss the prospects of this IPO. Namaste Astha ji, a very warm welcome to you. What a wonderful time to be on Dalal Street. One after another, lots of IPOs are getting listed and many of them at a very sharp premium to their offer price. Now, what are the hopes and expectations that you have from Hyundai's mega IPO, and what advice do you offer to potential investors?
Hello. Thank you for calling me on the show. Now, talking about this IPO in particular, yes, it is the largest IPO which the bourses have witnessed after such a long time. So, it is the largest IPO, and Hyundai Motors India Limited, as we all know, it is a leading player, and in the oligopolistic market where there are only two passenger vehicle makers are there, so it holds the second position after Maruti. So Hyundai Motors India Limited, it is the second largest player in the Indian market. And in fact, if I talk about the global market, it is the third largest player. So talking about this counter, they hold a strong market share. Their financial performance is very strong. And the valuation, which is the major concern at this point of the time, I'm highlighting directly that point. The valuation looks to be little stretched if I compare it to the immediate comparable, which is Maruti. I'm not taking the other players like Mahindra and Mahindra or Tata Motors for the sake into the comparison, but looking after the valuation, it looks little stretched at the current point of time.
Okay. Astha ji, let's just break it out very simply. Because it is an offer for sale and none of the money that is being raised, which is 27,870 crores, will come to the Indian company. All of it will be taken by the Korean parent. So this money is not coming into the Indian unit. It is not going to be used for any expansion or any increase in its retail presence. The money is going to Korea. Now, very simply, should the investors apply at the lower price range, which is 1865, or do you feel that post listing the secondary markets will give a better opportunity to buy this IPO? Do you expect this IPO to be oversubscribed once, twice, or 10 times?
So now talking about the subscription figure, first of all, I'm taking your last query first. We are expecting it to subscribe fully. I am not
Okay.
able to comment right now on the oversubscription figures because we really need to see at this point of the time. My idea is that around 10% in the retail category, it is already subscribed by 10%. So we are expecting this IPO to be a go-through IPO with a full subscription. Maybe oversubscription might be there. So now what should a retail investor do? First of all, we are recommending it to subscribe only for long-term purpose. So those who are having a long-term view in the mind, long-term here I'm referring to 6 to 8 months minimum time period. So if this such a time period is there into the mind, then put your money into this IPO. Otherwise, leave it. Why? Because what we are saying that it is first of all the biggest size IPO, and we have seen in the
Yes,
past. The history says
correct.
itself, whenever such large size IPO came, they have never garnered listing day premium. And the major point about this company is that the valuations are also stretched. So talking about the listing pop seems to be a negligible if I talk about this IPO. But there is one caveat here, Shelser, and the caveat is that in case if the IPO will go through and it will be subscribed like only 1 or 2 times, then the hands which will be subscribing it will be a very strong
Okay.
hand. And in such case, the supply will not be there on the listing day because we all know those who will be subscribing to this IPO, they are keeping into the mind the long-term point of view. So with such a mindset, if people are subscribing to the IPO, then they will not going to come on the listing day selling. So in that case, maybe the supply will not be there, and then we might see some sort of a flat listing or maybe 4 to 5% listing. But here the main question is it a worth risk taking at to 4 to 5% risk, listing gain, if at all, if it comes? Then my idea is it's better to stay away from this IPO. Don't apply at this point of a time. Let the price settle after the listing, and then one can make an entry, because at the max we are expecting 5% listing gain at the max, in case if it will going to happen. I'm not saying that it will be happening, but in case if it will going to happen, so at the max 5 to 10%. So I think there will be no worry in those cases, even if it will be available at 10%. But rather than making or taking risk at this point of a time, it is better to wait and watch. Let the listing be done. Let's see how the listing will be there, and then make entry into this counter. Maybe we will get the better chance to entry at the lower price. So, looking after all these parameters, we are recommending only for long-term investors to make an entry into this counter. Otherwise, for short-term, leave this counter, let the price settle, and then make entry into this counter at the later stages.
Okay, ladies and gentlemen, if you look at the workings of Hyundai, it's one of those very well managed automakers in India, and over a long period of time, this company has created immense wealth, at least for its parent, and of course, it has added a lot of competitive fervor in the market. They have 13 models so far, and look at the Korean parent's volumes. Hyundai contributes about 18.2% of its parent's volume. So far, Hyundai makes about 8.2 lakh units per year in India. The capacity is going to rise to about 10.7 lakh units by FY26. They have just bought the Ford Motors plant in Maharashtra. As of now, Hyundai has just one integrated plant which is operating out of Chennai. There are other more positives. If you look at the PE at which it will get listed, it is somewhere like 25.6 against the peer median of about 27.5 times. So, IPO is fairly okay. The issue is that the entire money, 27,870 crores, is being taken by the parent, and not one single paisa is going to be utilized to further improve the market share, to further improve the working capital requirements and many other things in the Indian market. That is the only quibble that people have. One point of contest is also that since FY20, Hyundai India has lost market share. It was at 17.6% in India, and it is now somewhere like 13-14%, and that is because you have a very strong competition coming in from Tata Motors, from Mahindra and Mahindra, and in the case of Indians, we are now buying more SUVs than passenger cars. When you Astha compare Hyundai to Maruti, the reason why I ask about Maruti is because somewhere in 2003, the Maruti IPO was priced at 125 rupees, got listed at 140, and is now somewhere like 13,000 rupees. Yours truly is a Maruti IPO holder, and therefore, I have a special interest in Hyundai's IPO. Astha.
Yes, but at that time, Maruti was the only player. First of all,
Yes.
here we are working, or we are talking about the oligopolistic market. So in
Yes.
oligopolistic market, there are two players, right? And one major point about the concern is that right now their margins are superior than Maruti's, especially if I talk about their EBIT margins or ROE or ROCs.
Yes.
But here the point is that now they are doing the capacity expansion. So, Shelsa, my idea here is that when you will be doing the capacity expansion, definitely your ratios will going to dilute. So, whether the sustainability of these margins, whether these margins will be sustainable or not, that we really need to know.
Yes.
Because right now, the only edge which the Hyundai is enjoying over the Maruti, apart from the fact that the share of the SUV in case of Hyundai is better, because Hyundai is having 63% share of SUV in their total product portfolio, and SUV share is always a margin garnering, portfolio. So in that way, also their margins are better. But with this capacity expansion, will they able to maintain the margins? We really need to see that, because the company is planning 30% capacity expansion in coming 1 or 2 years. So at that time, my idea here is that these margins will also be diluting going forward. So looking after the Maruti, there are some points which are better than the Maruti, but in the longer term, will these points of maintaining strong margins I think we really need to say are questionable at this point of a time. And that's why we are not very much positive on this part. Another point is that the industry tailwind. So I think the industry tailwind is also not supporting at current point of a time because we are seeing the auto numbers which are showing a pure decline, especially in the passenger vehicle sales. So at this time also, we really need to see how the industry is going to support such kind of valuations, given the fact the sales is declining. So altogether, Maruti always enjoys number one position where they have a
Yes.
strong domestic market share and their valuation are in line with the Hyundai's valuation somewhere on the price to book multiple. In fact, Maruti is at a discount to Hyundai. So that's
Yes.
why I'm not very much positive on the Hyundai's IPO. From the shorter term point of view, again, I'm here emphasizing the shorter term factor, not the longer term. For longer term, it is a go candidate, but for shorter term, it is better to wait and watch.
Okay, Maruti, ladies and gentlemen, enjoys a 43% market share in the passenger vehicle market compared with 15% that Hyundai has. But some of the numbers that are there on the balance sheet of Hyundai are better than Maruti, and let me just highlight them. To be fair, we are offering you an honest, unbiased assessment on what to do with Hyundai as far as the IPO is concerned. It is not a recommendation to either buy or not buy. So this is data, and it is for you and your own independent financial advisor for you to come to a decision. Okay. Now let's look at this thing. 3-year median operating margin for Hyundai is 7% compared with 3.5% for Maruti. Operating profit growth at Hyundai is 53.6% compared with Maruti's 83.5%. 3-year median return on capital employed for Hyundai is 20.4. It is far better than the 10.6% that you see on Maruti Suzuki, and the volume growth is where Maruti edges higher, 11.4% per annum versus 9.7% as far as Hyundai is concerned. So all these parameters, ladies and gentlemen, will help you make a decision. Asta is very clear. If you are looking for a very long term approach, say at least 1 year or 2 year, only then apply this IPO. If you are really very keen to have this brand name in your portfolio, then please apply at the lower price point. And let me confirm that lower price point for you. That I think is at 1865 rupees per share. Remember, all of the money that you are coming to pay to this offer for sale is going to go back to Korea. The only reason that Hyundai parent is getting this company listed is because of very frothy valuations that are there in the Indian market at this point of time. They are taking advantage of this wonderful bull run in the secondary markets and a fabulous bull run in the primary markets to sell you their company at a substantial premium, not only to their own business in Korea, but also at a fairly decent higher valuation compared with local peers in a market which is extremely competitive. Asta, I will let you have the last word. Your final thoughts. Are you applying for this IPO? Okay, this will be the critical factor. Are you putting in your own money?
So, due to certain compliances, now we are not allowed to invest in the IPOs also because we recommend IPOs a lot. So, we don't invest in that or don't apply in that. But my fair advice to everyone is that just for the sake of 4 to 5% listing gain, in case if it will happen, I think there it is not worth a risk taking. So, better to wait and watch, let the price settle because I'm not saying that it will not list at the premium. Maybe, who knows? Because at that time, if the subscription will be very lower, then definitely all those hands will be very solid hand and they will not come on the listing day selling. So might be the issue price can be maintained or maybe 4 or 5% premium can be maintained. I'm giving a one possibility, but I think it is not worth risk taking for just that 4 to 5% premium also. So my
Okay.
idea here is very much clear. Apply for long term if you want to apply. Otherwise, stay away at least for the listing gain perspective from this IPO.
The other perhaps just the market folklore for larger IPOs is that on listing day they haven't done well. Look at how LIC performed, look at how Paytm did, look at how one or two other very, very big offers sort of flustered because a large part of that money was taken away by the parent or the PE fund or the VC fund away from the company, and a very small percentage or minuscule 0% in the case of Hyundai came back to serve the Indian parent. Thank you so much, Astha, and it is such a pleasure to again be in touch with you. Let's hope Hyundai over the longer term creates wonderful value for Indian shareholders, just as Maruti has over the last 21 years. It's just a 100 bagger. I love to say that because long term investors into quality IPOs and great stocks generally get rewarded more than what their expectations were. Astha, in 2022 or 2003 when the IPO was listed at Maruti, believe me, nobody thought it would be a 100 bagger in 20 years. But here we are, and such is life.
Right. Absolutely right, sir. Or that's why we are saying long term is the only phenomena for those who are interested in applying. Because one more case of the Reliance Power is, I still remember that time in 2008 when Reliance Power IPO came, because I was at that time also
Yes.
I used to make IPO reports a lot, and the way it got listed, I mean, we all know the history. So sometimes
Yes.
big IPO, despite the strong fundamentals also, but due to the supply, side issue, we really need to see these other 2 3 points also apart from the fundamental. That such a big IPO, the supply will be there, how it will be going to absorb, who all will be there to absorb such kind of quantities of share when they come for the selling. So we have to take into account all these factors and then make a recommendation. And that's why I'm saying better to wait for the long term. And if
Yes.
you want to have it in the portfolio, otherwise leave it. For listing in purpose, it's better to leave.
Absolutely. And at no point of time, ladies and gentlemen, is what Business Today or Asta suggesting that the IPO will, the OFS will list at a lower price, just as previous such large issues have. But all we are trying to make out is that a general correlation exists in these kind of markets when such huge IPOs come, when the market is also at a record top. So with that background in mind, ladies and gentlemen, if you do wish to apply into the offer for sale of Hyundai, please do also consult an independent financial advisor and take your own understanding of this OFS. Thank you so much, Asta. It was a pleasure
Thank you.
hosting you.
Thank you, sir. Thank you very much.
There's a lot happening on the other side of this break, ladies and gentlemen, on Business Today Television. Continue watching.
Hyundai IPO, the biggest ever IPO, is going to be opening for subscription in trade today. This is something that we have been all waiting for. We do know it's going to be upwards of 27,870 odd crore rupees at the upper end of the price band in the kind of large scale of an IPO that's opening up.